What is up, guys? It's Warren here. So in this video, we're going to cut straight to it. We're going to talk about fibs. So the way fibs work is that you have multiple levels. So let me actually show you. So I'm going to share my screen. Okay, so now we have the US 100 market, my favorite market of all time. And we come to the fib retracement tool, right? So the way fibs work is that you have levels from 0 to 100. Fibonacci is actually something that was developed a long time ago from like the spirals and stuff, showing how life is formed, or the psychology of the mind, or something like that. But anyways, in trading, it's a similar principle. All right. So let me delete this. We draw it from top to bottom. You will see that we have levels. So the first level is 0. You can have a whole bunch of different fib levels if you edit it here. But the main levels are the 2, 3, 6, 3, 8, 2, 0 0.5, 0, 6, 1, 8. These ones are my own specific fib levels. And then we have 1, and then we have fib extensions. So these fib extensions basically mean they're also levels, and they also predict that price might go there. Okay. So how the heck do we use this? So generally, fibs can be used as a support and resistance. Okay, so when price is coming up, it'll bounce off a level and then go the other direction until it finally breaks through. Maybe retrace to the level and then go to another level, right? But how do we exactly use that? So here we have the NASDAQ. So it is an inverse NASDAQ. So let me just change that back. Sometimes I use inverse to change my bias. Sometimes you can't see things until you invert it, right? But anyways, so if you look at the NASDAQ, maybe the fall is actually much better. So the fall is less choppy in 30 minutes. And so you can use fibs on any time frame, but usually the higher the time frame, the more it respects the fib levels. So if you look at market structure, right, what does market structure mean? Price is moving in a certain direction. If it's an uptrend, it has different points of structure that it needs to change direction. All right, so if you look at this market, it's been going up. It makes retracements, it goes up, it makes retracements, it comes down, makes retracements, and goes up, right? So if you actually look at this, when it came down here, it became bearish for a while, but it's not actually bearish. It's just a retracement, right? So if you actually look at what was happening, if I draw the fib from the lowest point to the highest point, right? Why not this highest point? Is because the market went higher before it did a big drop, right? So if you look at this lowest point here to this highest point here, you will see that where price came before it actually reversed was the 0.618 level, right? Another level it respected was the 0.382, and then it finally broke through. It respected around the 0.5, just a little bit, but the main level it respected is 0.618 before it did the reversal. A lot of people call this the golden zone, but a lot of times it can even respect any other level, right? But if you look at why it respected this, is because you had this and you had a support and resistance also, right? So it's like two confluences before it moved up. Now, this is on the big, so this is actually, that's actually a daily retracement, right? Or daily fib level. Like if you look at this, price has been going up. It made one bearish bar, but it doesn't really mean anything because one bearish bar doesn't really retrace anywhere. And then it finally comes down. on the 618, right? So if you look at the market here, came down, and if you on the daily, if we draw it from the bottom here to the first retracement, you can see that it comes and respects 0236, right? If you draw it here from there to there, it respects 0236, right? But if you change the point of origin, so let me just change this. Not sure why it's not moving. Let me just refresh. I don't know what's going on. But anyways, yeah, so if you change the point, let me just go back here. Oh, I think it's locked. So if you change the point of origin, you can see that now where it respects here it respects 0328 level. And here it almost came down to my 74 level. Right. But generally you can really put fibs. The way to actually understand where to put fibs is you can put them anywhere. Not anywhere, but usually are highs and lows, right? Like we saw price came down here, finally came down here. So what you'll be doing is waiting. So let's just say you didn't know, right? You just saw this big bar coming down. So we were here at some point here, right? We put our thing there, and then we didn't know where price is gonna come. We think, okay, maybe it comes to the around here to the 618 because it's a level here, or maybe it comes here on 0.5 because there's a demand level here, right? And then what happens is comes down, and then we see this price action push up, push up. We see this bar here with a little wick. That means it's starting to lose buying momentum. And then we see this bar here. So generally, you can see that 0.5 is a very strong level. And then we can add other confluences to maybe execute this trade. Maybe you decide on the 4 hour, I want to take this trade, I want to put it at 0.6 level, stop loss, and then maybe TP above here somewhere. Sometimes you can even use the fib extensions. So this fib is actually wrong, so it needs to come from. Sometimes the trading view fibs are weird. You have to change the settings. So you come here, 0.5 level, and you'll also have to change the numbers here. But generally, they're around this, like 31, similar to the 618. But you have to change it around. So it came to the 0.5 level, and maybe you TP on the extension. So the extension is where price is likely to go. So if you leave it, you'll see it becomes bullish, and then it respects the it's not on the dot, but it kind of respects this fib extension levels. So fib extensive levels you can use for TP, but you'll have to backtest everything. So generally fibs you want to use from the lowest point to the highest point on the wicks, like from this week to this week. And another most important thing is in order for the fib to actually work, you need to see that during its progression, it starts to respect levels, right? What I mean by that, if you look at this, okay, it respected the 0.28, but it just started breaking through all these levels. it made a retracement in the 0.5 levels. It came here, it respected 0.618. So you know your fibs are around accurate. So that's why you can look for the next level to maybe go on a trade. But yeah, guys, thanks for watching. Enjoy your day and catch you in the next one. Don't forget to hit like and subscribe.